Marcus Strong.
What's up?
I need new shoes. I need a vacation. Look at this old dress. In any effect.
Relax. In-class online platform by ICEA Lion that allows you to deposit in and withdraw from a money market fund. What's more, you can start from as low as 500 bob. That way, you can earn more and more till you can afford that trip to Dubai.
I'm already in Dubai.
Anza sasa. Visit invest.icealion.com.
Haki kwani pesa yangu inaendanga wapi?
Sielewi.
I get money from so many places. My salon, my 5 chamas, my businesses. Lakini kiangalia tu hivi, kwisha. It's all gone.
That's why you need DigiTrust from ICEA Lion. DigiTrust allows you to invest any money you get from as low as 500 bob in a money market fund. What's more, you can set goals for yourself and keep track of your money online from wherever you are.
Hadi sasa nitafungua hardware.
Anza sasa. Visit invest.ice. Anytime.
Anywhere, anytime.
Anywhere, anytime.
How?
Because DigiTrust is a first-in-class online platform. Everything you need at a touch of a button. Easy and very secure. Anza sasa. Visit
Meet Mark. Mark is enjoying a barbecue in his home.
anywhere,
Anytime.
anytime,
Anywhere, anytime.
anywhere, anytime.
How?
Is a first-in-class online platform. Everything you need at a touch of a button. Easy and very secure.
So, to start an account, to deposit my money, to monitor my interests, to access my money,
All online.
then why did I have to come all the way here?
So that I can tell you, Anza sasa. Visit invest.icealion.com.
Haki kwani pesa yangu inaendanga wapi?
Sielewi.
I get money from so many places. My salon, my 5 chamas, my businesses. Lakini
You need DigiTrust from ICEA Lion. DigiTrust allows you to invest any money you get from as low as 500 bob in a money market fund. What's more, you can set goals for yourself and keep track of your money online from wherever you are.
hadi sasa nitafungua hardware.
Anza sasa. Visit invest.icealion.com.
Said more money.
We did. Who said more money? We did.
Nani?
DigiTrust, powered by ICEA Lion, a first-in-class online portal that allows you to invest in a money market fund so that you can start to reap more money and more money and more. Yes, everyone, except you, goats. Visit invest.icealion.com and with as little as 500 bob, get started. Anza sasa. DigiTrust from ICEA Lion, adding value to your money.
Welcome to today's webinar, Planning Today, Thriving Tomorrow, hosted by ICEA Lion Asset Management. We can see a good number of you coming through, but I think time has already gone 5 minutes, so it's a good time to start. So karibuni sana. We are happy to have you here, that you've been able to find the time to talk about your finances. We appreciate you. My name is Kanza Musyoka. I'm the General Manager, Business Development and Client Relations at ICA Lion Asset Management. We like to call ourselves ILAM in short. ILAM has been in the market, companies and pension funds in their investments. Today promises to be a very exciting and informative session. We have with us two good presentations. The first presentation will be on the economic outlook of the year. Please grab your notepad or have your online notepad ready so that you can be able to get some good insights into what we expect in the tomorrow. Here we promise to give you practical solutions on how you can be able to enhance your finances. So get a good spot with little distraction, ready with your pen and paper, a cup of water or a cup of coffee, and join us as we go through this webinar. To start us off is our CEO, just to welcome you and just to say hi. So I wish to welcome Einstein Kihanda, our CEO, to start us off.
Thank you very much, Kanza. Good morning to all of us who are participating in this webinar this morning, both physically and online. Happy New Year to all of you. And thank you very much for your honoring us with your presence to participate in this webinar this morning. As ICA Lion Asset Management, Kanza has already talked, we've been around in the market for almost 40 years. And this is an effort on our end to start us off in the year on a high note so that you can be able to understand what's happening around us and also plan your finances accordingly. ICA Lion Asset Management is part of the wider ICA Lion group, which is represented in Kenya, Uganda, and Tanzania, comprising 8 businesses in diverse, generally in the financial services, that is in insurance, asset management, and in trust and scheme administration services. We are a one-stop shop financial services center, and we look forward to adding value to you in all your investment portfolios and all aspects of your finances. So I want to take this opportunity to welcome you all and to assure you that we continue to work with you and partner with you in your financial journey, and we are ready to engage and interact with you in matters to do with your investments. So thank you very much, and we look forward to your active participation.
So thank you, Einstein. I hope you now know who we are, what we do, and our mission, that is to create and grow your wealth. As we go through the session, please feel free to post your questions. You can post your questions on Zoom, on the Q&A box. If you're joining us across our social platforms, please feel free to post your questions there. We will answer the questions on the go. And also look out for a poll. We'll be running a poll, an interesting poll. Take time to do the poll. It's a small assessment, your own personal assessment of where you are financially. And at the end of it, we'll talk through the results of the poll. Without further ado, I want to introduce our first presenter. Our first presenter is a lady we call Woman of Stamina, because this market and this life needs us to bring our stamina. She's been in this market doing what she does, which is investment management for over 17 years. She has been managing pension funds, money market funds, and offering financial advice to individuals. And she has the pleasure of taking us through the economic outlook for 2024. So welcome, Esther Mushai, the Senior Portfolio Manager at ICA Lion Asset Management. Karibu sana.
A very good morning to you all who have joined us, and Happy New Year. Always a pleasure to interact with all our clients, and really to thank you also for really being part of us and allowing us to definitely offer you investment solutions for your objectives. Most of us, because of what's going on both globally and domestically, or what do we do this year? Is it going to be a worse off year than last year? Is the volatility going to persist? So that is what I'll be sticking to, perhaps give some guidance, really emanating from our research, and of course, really observing how the markets have been behaving. So let me just dive straight in. So I will, the first part of my presentation, what I'll do, I'll just, of course, take you through where we were, where we've been in 2023, and give you an outlook, an economic outlook and overview that perhaps may guide investment strategies into 2024. And knowing that we have increasingly become a very small global village to invest, I would like to emphasize on is, as an investor, you must always start from the global outlook, because that is what today is really painting a picture for us here domestically. So what I'll seek to do in my first slide is really just to give you guidance, or rather to tell you where we have been. And what I can say is 2023 was a very special year, a very unique year. When you look at global events, it's a year that had a lot of hopes and fears at the same time, because of being in enchanted waters, so to speak. So looking at the way we started 2023, there was a lot of expectation of recession of what had happened in 2022, the volatility that we had seen emanating from Russia-Ukraine invasion. So come 2023, we kept on hoping or really fearing for recession, but that never happened. In fact, what really came out, especially from those advanced economies, is more resilient or stronger economies when you look at the data that has been coming through from those economies. So the World Bank projects that global economic growth this year is likely to be weaker than 2023. And this is because of high inflationary pressures and, of course, elevated interest rate environment, which have been, that is what has characterized the market since 2022. And that, according to Fed and other global research analysts, perhaps near term. When I say near term, perhaps touch on that have actually come through post-pandemic, and that is something that we really need to watch. So by and large, what we are saying is that from a global perspective, the World Bank and other research, global research for the year, and largely because of the factors that I've talked about. We also look at a place like China. China is where we were perhaps going to of issues, starting with the property crisis that has been worsening, and we have also seen deflationary risks coming through. China, perhaps in terms of their economic growth, will definitely accelerate if there is more deliberate government policy, or rather one that is really targeted to sort out their issues, or a great pickup in global demand. So we have also seen, and I'm sure most of you are aware, there has been a lot of geopolitical tensions that have been permeating through, starting with the Russia-Ukraine war. Now we have the Israeli-Hamas war that has been ongoing. And of course, questions are, is it going to affect, of course, the economic outlook? Is it going to affect even our local? So if that war escalates beyond, and we have seen that really building up, it's a developing story. We've seen the US and the Britain really come through to, of course, Yemen-based Houthis militants, of course, also trying to attack high cargo ships, vessels on the Red Sea. So definitely that is going to have an impact. We've seen protests in Libya in one of the large oil fields. We expect disruption in terms of oil there. But so far from what we are seeing is that oil prices have not gone up quite significantly, as of course you would expect with such kind of disruptions. So it's a key watch. We are really watching that space to see then if we are that is going to escalate beyond, of course, Israeli and Hamas. So it's a developing story, but a lot of geopolitical tensions really shaping, of course, the macro outlook when it comes to the world view. Then perhaps just to touch slightly on the impact that has had on global financial markets. And I know we also have our diaspora clients. And you then question, where are we headed in terms of investments? What kind of an environment are we looking at? And really, looking at the last slide, touching on the geopolitical tensions and what is going on, and of course, I've talked about high inflationary environments. We have slowly post-pandemic started seeing very unique factors coming through. You know, when we have been in an era of, we call it great moderation era, and where central banks also had, of course, a very easy way to really, of course, spur economic activity or economic growth in their countries through perhaps loose monetary policy. That is perhaps not what we may see in the next decade. What we may actually see, if whatever we are going through persists, is a high inflationary environment with high or rather elevated interest rates within the economies. So we are also seeing some realities coming through. We are no longer in the cycles that we used to see. We know 10 years we'll go through this in another investment cycle. This is what will happen. We are a lot of volatility and structural realities that are panning out. And perhaps in the next decade, what is going to really inform our investment strategies will be these key factors that I've pointed out here, just touching on just a few of them. And one of them is the geopolitical fragmentation, which I've already touched on. We've seen increasingly that there are a lot of groupings when it comes to global economies. And we have seen the dollarization conversations coming through. So a lot of fragmentation really happening, and that is likely to inform our environment or strategies going forward. Other structural changes we have seen is a lot of capital allocation to low carbon economies. Of course, there's a lot of money because of global climatic conditions and all. We've seen a lot of money being channeled there. So that is also informing capital allocation for most fund managers or investors. And what has also come through post-pandemic, especially in the advanced economies like the likes of US, China, they cannot increase production without increasing inflation because of their aging population. We are talking about high inflationary environment. We are talking about high interest rates, but surprisingly, we are seeing unemployment rate being very low in the US, and that has been basically because of the aging population. We've seen the financial markets, and looking at that graph, financial markets actually being driven by technology companies. We've seen the influx, or rather the invasion of artificial intelligence really coming through strongly, and that technology companies have actually driven performance for like now the S&P index last year. That is the financial markets out there, offshore markets. They have been driven by technology companies. So that is those are among the key factors we are seeing will drive our strategy, investment strategies going forward, and even the macro environment that you're operating in. So what this calls for as an investor is a more selective approach. This is not the GDP numbers. So we've seen agriculture really drive because of course, good weather conditions last year. We've seen agriculture driving our economic growth. But going into 2024, there are other unique factors that are perhaps locally are still going to be a risk. And of course, those are the headwinds but I would like to touch on, because the first half of the year, before the Eurobond payment is made, we are actually seeing lower revenue collection. We are seeing high taxation and, of course, a weaker currency really driving investor sentiment. And as such, despite having very low inflation in the country, we are actually having very elevated interest rates environment. And in the next slides, we'll be seeking to answer whether the high interest rate environment is actually helping us. Is it being transmitted, and is it really having an impact? So in a nutshell, our view, or rather our forecast in terms of GDP growth this year is that we are likely to grow by more than 5%, and largely really supported by agricultural sector. And in the World Bank report, we also saw that they mentioned the growth will also be supported by private sector investments, but that is also a key watch, just to see, because of the private sector crowding out, and you'll also see that short. In a nutshell, we expect growth really to be driven by agricultural sector, and their headwinds ahead as well. Then when it comes to the macroeconomic environment and outlook, let me start with inflation, and I've touched on it a bit. So for inflation, we have seen inflation in 2023 really come off quite significantly to below the CBK upper target, which is 7.5%. We closed the year at 6.6%, and quite some decent numbers there. And in fact, when you look at it in terms of interest rate, then you'll expect your interest rates to really come off. But that has not been the case. So really concentrating on headline inflation, our view is that this year we may actually see inflation remaining benign, and that is because of the fact that we may have rains in January. I don't think I've been seeing that for a very long time. So that is likely to support headline inflation remaining below the upper CBK target. But key risks, of course, abound, and one of them is oil prices. If, of course, the Israeli-Hamas disruption really escalates to higher levels, then we may see supply constraints there and higher oil prices coming through. Even as we talk about a slowdown in global demand. So that is one of the risks we see. And of course, we've started also seeing freight companies increasing their costs. That is definitely, for us, an importer country, that will elevate our imported inflation. When you look at the cost of items, and especially the ones that, of course, use that channel to bring commodities to our country. So that is a risk when it comes to inflation. Then when you look at interest rates, so I've talked about inflation remaining benign. In 2022, when inflation really hit those high levels, we saw the central banks around the world really raise interest rates. Question an investor would ask, now that inflation has really come off, why aren't we seeing rates really coming off in tandem? Why are we seeing rates still going up? In fact, in December, we saw the Monetary Policy Committee raise the central bank rate. Then you then wonder, what then is inflation targeting still the key mandate here? Or what is, so we've seen central bank really grappling with a lot of trade-offs, a faltering economy, and on the other side, of course, there is a benign inflation and trying to really spur economic growth and currency weakness. And that, I think, is what we will answer the questions that we are asking on interest rates. So on interest rates, question is, the hike in CBR to 12.5%, is it really effective to where we are in terms of the transmission into the economy? And the answer is what we've been seeing, and if you look at that graph, it's really likely to strangle the economy if it's not really well managed. Why? Because it's likely to to extend a period of very low private sector credit growth, which is badly needed for economic growth. We've seen our country being at levels of 30+% when it comes to private sector credit growth. That has been quite benign in the last several years. And if we continue in a high interest rate environment, that is likely to really, of course, cause strife when it comes to economic growth. So our view is that the CBR, in terms of effectiveness, perhaps there are other structural issues that need to be looked at other than just targeting to raise rates, because we need to ask what then, as we continue raising rates, what are we really trying to tame, or what are we trying to curb, because inflation is already at low levels. And I think the thorn here for central bank has been the currency. So let me just finish on interest rate cycles. We've also seen our bonds really, when you look at the yield curve, our bond yields have gone up across the yield curve from 1-year bonds from the lines. What those lines mean is that you can see where we were in December 2022, vis-a-vis, of course, the top line where we were in December 2023. Rates have really gone up. And one of the reasons why they have gone up was really to curb volatility, especially in the currency. So our view is that we have seen in the, last week or 2 weeks ago, the Treasury actually revising the domestic borrowing target upwards. That is likely to have a very severe effect, of course, when it comes to interest rates. And that was largely because of revenue collection falling behind target. It was at 34% to where it was supposed to be at half year. So that is likely to exert more pressure on local rates. And perhaps that is what I was saying. Those are among the headwinds we really need to watch out as investors. What then do you need to do? Because we are expecting a further increase in interest rates. Of course, investors will continue to pressure for high risk premiums when they go to bond auctions and treasury bill bids. So what we just need to get out of these slides is that interest rates are likely to go further up because of borrowing appetite by the government, or rather the revision of the borrowing target upwards by the government. That is likely to have an impact on rates. Then currency, I think this is where our issues have been. And in 2023, of course, because of the dollar strengthening in 2022 quite sharply, it had an impact in third world countries, especially on currencies. And Kenya is being among the countries that has accumulated external debt. Definitely this has had a very huge impact. So we have also seen low confidence in our markets also impacting us when it comes to currency. And that is why we have seen more investors, or rather local investors, really parking money in dollar denominated assets. For the first time in very many decades, we are seeing investors, we have seen a rise in dollar denominated deposits, rising all the way to more than 1 trillion shillings. That is, of course, dollars that have been wiped out of our markets. That has a very huge impact. We have also seen central bank guiding that to show up their reserves. They're also coming into the market to buy the same dollars. We have seen, of course, heightened, of course, import demand when it comes to dollars as well. That is also causing upward pressure, downward pressure on the currency, our currency as well. So in 2023, we saw our currency depreciate against major global major currencies, as well as even East African currencies, by quite some huge margins. You can see, like the US dollar, we were down by about 21%, and it's still weakening quite rapidly. We've seen the likes of the pound and the euro really coming off quite significantly as well. Our shilling has really depreciated, and that is likely to have, it's having a very big impact, especially on our external financing. We've seen our, like the Eurobond, for instance, that is maturing in June, has ballooned by a whooping 80%, when you look at the 10-year whatever time frame. So that is having a very huge impact on our external financing. So currency is likely to, what the government needs to do is basically to increase confidence so that we have also other players come into the market, they bring dollars into the market. Otherwise, you continue raising rates, even if you raise them to 30%, if there's no confidence in the market, then definitely we will continue being in this conundrum. And of course, we also need to incentivize the the dollar deposits to be unwound. That will not happen if an investor still expects our Kenya shilling to depreciate further. So that is a key watch. And when it comes to currency, I've concentrated on this slide because this is where our pain point is. And really coming to the last slide of my we've invested in the fund, we've invested in our stock market, and the question is, what is the way forward when it comes to the stock markets? What I can say is that the declines we have seen in the stock market have been largely driven by the macroeconomic environment, the currency outlook, of course, and the currency volatility. And of course, when you're having your fixed income assets giving you 17% and above, then you'll definitely run away from the stock market as well. So demand has been very low. We've seen foreign investors remain net sellers in 2023. They have been selling out of our market since pandemic days, and that has had a very huge impact on the stock market. So the way forward here is, if you're looking, we are having, since the decline in prices, or rather the decline in the stock market is not fundamentally driven, we are having decent companies really being traded at very attractive valuations. What I mean is the entry points in terms of price are very attractive. But question is, we are going to be in this environment for how long? So this environment is for long-term play. When it comes to currency, if you have risk appetite, this is when you start accumulating or building up your equity portfolio very slowly in a very staggered fashion. So our outlook for 2024 is that, of course, with currency outlook remaining volatile, definitely foreigners will not be back in this market. And of course, with fixed income assets giving us returns of above 15%, it will definitely starve off demand from the stock market. So it's likely to be where it is, or perhaps lower than where we are. So what is then the recommended strategy? This is into my last slide. Questions abound into then what is the direction in terms of investment strategy? Cash is king in this environment. And that is why when you're expecting further upward pressure on interest rates, our view is that you really need to, and that is what investors around the world have done. You really need to keep on having loads of cash within you, invest in liquid assets. The money markets are a really good tool to have around this time, really to enable you to be very agile when it comes to, of course, responding to any market developments or investment opportunities that may be there. So cash is king in this environment. The other thing when it comes to the stock market, what we have said then is that you need to look at companies that will weather the storm. There's still definitely a chance for building up an equity portfolio through our equity fund or even the stock market. This is a time to start building up that portfolio slowly because you're getting very good companies at very cheap valuations. And finally, safety is key in this environment. The companies that are going to win in this environment are the companies that have very low debt levels. That is something to really watch out for. And of course, companies that have a huge pile of cash at hand. So those are the companies that are going to be a winner in this environment. So what we are saying is that safety is key. Wherever you're investing your money in, ensure you invest in sound companies, invest in a company that is stable, like ICA, of course. Invest in a company that is stable and is sound, that can navigate through this very volatile environment. Thank you very much for listening in, and I'll be looking forward to your questions. Thank you.
All right. Thank you, Esther. She's been able to shed light on what we expect from the economy, our projections for each investment class or type. So she's talked about equities, she's talked about currency and the fixed income assets. And so as you're seated there as an investor, you're trying to see how am I going to grow my portfolio in this economy. So I hope you've been able to get a few things that you can implement so that you can continue building your portfolio. As she has said, cash is king and also safety is key. So my question to you is, where do you get your financial information from? I can tell you a story. When I started investing, it was from peer pressure, what my colleagues were doing. And when I started working was when land and plots were the in thing. I think it was the height at that time, about 17, 18 years ago. So without any due diligence, I just used to listen to my older colleagues in the office and where they're putting their money, and I would move with them. But time has changed. Information is available. So it is always advisable that you have or you are receiving key information that is provided by companies that have done research, and they can be able to put their names in it. So for you to get your financial information on a regular basis, I would recommend subscribe to a mailing list for a company. So subscribe to a mailing list or get a financial advisor who's able to share with you that information on a regular basis. Just a reminder that we have our poll, so if you hadn't completed, please do so, and we'll share the results at the end of the presentations. Also, remember to post your questions on the Q&A on Zoom, and on the other social platforms, feel free to post there. We have a team that is responding on the questions real time. I would like to introduce our next presenter. It's a name that is very familiar to us. We've seen him on media, we've seen him on socials. And so our next presenter is Waithaka Gatumia. He's the CEO of Centonomy. He's a seasoned professional with over a decade of experience in content production and training in the areas of personal finance management, entrepreneurship, and career development. And today he has the pleasure of taking us through the presentation themed Planning Today, Thriving Tomorrow. Good welcome to you, Waithaka. Take on stage, take it from here.
All right. Good morning, everybody. At least two people in the room said good morning. Good morning, everybody. Excellent. And good morning to all of you who are watching online. It is great to be here. It is such a pleasure. Thank you so much for the great introduction, Kanza. I really appreciate that. And I'm looking forward to sharing you a couple of insights that we have gained as Centonomy over the last couple of years. First of all, Esther, amazing work. I think I feel more confident in my investments for the next couple of months and years because of what you have said. You outlined everything that I need to think about. However, for those who are watching online and to the customers who are there, I know you noted a few things. You wrote there and you said inflation, war, China, you wrote private sector growth. You also wrote other things, benign inflation. Now, for those of you who are online and you're watching, if you understand what benign inflation is, please write it in the comment box there and explain it to me, because I'll be coming there afterwards to do that. It can be overwhelming. And what you want to do, because I'm speaking to you as a retail investor, I'm speaking to you because I recognize that sometimes when you listen to a report like that, it's too much to take in. So which one do I pay attention to? That's not your business. As a retail investor, that's not your business. That's the business of the organization and the company that you're going to be investing through. You want to make sure that they are keeping their eye on those things. But for you, I am addressing you, your personal plan. I want to address you and your family. I want to address you and the plans that you have set for yourself. Because when we talk about planning today and thriving in future, I am speaking to you. There's no one else. Even as an investment organization, but you have to take the plan. You have to, make the plan, and then you have to take the action. And so I'm going to ask you to take action now. I want you to type in the chat box one of your plans or ambitions for this year. because it'll guide the responses of the organization here, ICA Lion, for example, in helping you and guiding you forward. So if you can type in the chat box, this is what I'm hoping to achieve in 2024, that would be amazing. As you do so, also type in the chat box where you're logging in from. It's so helpful also for us to be able to guide and to know which is the direction that we're going. Okay, so I am addressing you as the individual. You wrote down many notes. Maybe sometimes you didn't know what you were writing, but don't worry, you are in good hands. You heard Esther's presentation. This organization is also being led by a gentleman called Einstein. If you know somebody called Einstein, you know that you're in safe hands. So let's get started. At Centonomy, our mission is to shift mindsets so that purposeful people like yourselves who show up for a webinar on personal finance and growth in the middle of a busy week can be able to create wealth and live abundantly. That's what we want to achieve. And so we recognize, hey, this invitation went out to thousands of people, but you chose to be in the room, and therefore we want to empower you to be able to grow and to build your wealth. We've been doing this at Centonomy for over 15 years now, helping individuals to be able to grow their wealth, to understand what Esther was speaking about, now to understand how does it affect us as individuals and how can we grow from that perspective. If you Google Centonomy, you'll be able to find all the information that we have online. And so I have a quick question for you. In the chat box, kindly, if you don't mind, type what you define as wealth. When I say the word wealth, what comes to mind? Now I'm going to put everyone in the room on the spot. I said wealth. You guys are wealth managers. So when I say the word wealth, what comes to mind? Quickly, quickly, quickly. Shout it out at me. Wealth means what? Money, for sure. Good. What else? Investments. Thank you so much. What else comes to mind when you hear wealth? Financial security. You see, I'm in a group of financial advisors, for sure. Online, I can see the lines that are coming in because I know I'm speaking to majority Africans. They are saying land, I am sure. Many of you are looking and you're saying, Waithaka, I know that you're a father of daughters. You're a wealthy man, isn't it? If you have children who are I just have daughters, that's all. So it means I must be wealthy, isn't it? Others are saying, if I'm in a group of Africans, they must say land, isn't it? Yeah, some people might say cattle, right? So what is wealth? I can see those responses coming in online. So have a look at this. At Centonomy, we define wealth this way. Wealth is the ability to live the lifestyle that who wants? You, without having to work. Oh, that's problematic. Let me break it down. So the first part is to say, I have an outcome that I want to achieve. What do I want? Because anytime you're coming to speak to an investment firm like this, you need to know what you want. Because you see, there are so many investment products that are available in any facility. So which one is right for you? Do you know which one? And so I'm going to ask you, what do you want? And be specific. I want my child to go to university. That's not a good deal. No, no, no. I want my child to go to the University of Nairobi, and in the next 15 years, now we are talking. Do you see that that's the difference between a plan and an idea somewhere in your mind? Be specific. Because if you say, I want my child to go to the University of Nairobi in the next 10 years, then the financial institution can tell you this is the plan. But without that goal, everything is a good investment. By the way, all investments work. Did you know that they all work? But do they work for you? So what's right for you? So define what you want first. Be clear about it. And many of us don't like to be clear about investment strategies because it's like putting it out in the world and then suddenly we become responsible for it. Oh. If I tell people where I want my child to go to university, so now I'm responsible, isn't it? Yeah. But you're in this room because you want to take responsibility, and that's why you're here. Now, the second half of this statement is where there's usually problems without having to work. Let me explain a little bit more. This is what I mean. It means having sufficient assets that your assets can sustain your life whether you work or not. Now, here's the irony of this statement. Most of the people who get to the point where they have sufficient assets to sustain their lives continue to work anyway. I was watching a documentary about James Mwangi of Equity, and he wakes up at 4 in the morning. He goes to the... Look, James has enough money for him, his children, his children's children. They are okay. But we found that those like yourselves who are purposeful, you sitting in front of that computer who's purposeful and saying, this is what I want to achieve, you are the ones who find wealth because you continuously build along that way. So now I'm going to challenge you, and I'm going to challenge you in this way. I'm going to challenge your decisions on a daily basis because that affects your planning today so that we thrive in future. Let's go into that real quick. So, how much of what you work so hard for is actually yours? I want you to imagine that this calendar here on the screen represents your total income, okay? Your total income. I want you to imagine the next level that each month represents 10% of your income, okay? 10%. So that's 10, 20, 30, all the way to 120. I've even given you a raise, 20% raise just for the sake of this discussion. Let's see where your money goes. So first of all, you're good tax-paying Africans. 10, 20, 30% of your money goes to the government. So you've been you work from January to March for the sake of the government. Did you know that? That's it, yes. 30% of your cash. You are not yet paying yourself. Let's see when you're going to pay yourself. So after you've paid the government, where does your money go next? Type in the chat box. Type in the chat box, where does your money go next? Let's see. You can type in the Q&A, whichever method, so long as you're reaching us. Type something. Where does your money go next? So from our research, most people will say housing, isn't it? On average, 10, 20% goes towards your landlord or to the bank that you borrowed for. After that, you need to get to work, isn't it? Or the places that you're going. So transport, 10% on average. Oh, if you have, no, let's not even talk about children. Let's talk about the rest of it. And then you need to feed yourself. Household shopping. On average, we see households are spending 20% on household shopping. Good, wonderful. Where next does your money go? I can see people are typing there and they're saying, okay, now we have to take care of, which one do we do next? Even as we are going, we have to take care of our family. Africans, see, we have relatives. Do they call you for money? I think they do. So on average, 10%. Oops, I forgot. Most of us say that we are religious and we give towards our faith as well, isn't it? So on average, what do people, and even if you're not religious, no problem, you probably give charitably. And we the Kenyans who are always on the road raising money for who, this walk, for this, for that, charitable giving, isn't it? And even those WhatsApp groups that we're all part of, isn't there always a fundraiser on your phone? 10%. Oops. We have now finished your money. That is 100% of your cash. Have a look at that. 10, 20, 30, 40, 50, 60, 70, 80, 90, 100. And there's so much that we're yet to do. What have we not done yet? This year, praise the Lord, you didn't get sick. Okay. But someone else did, and you supported them. What else have we not? Oh, we've not paid school fees. Oh, sherehe. We have not gone anywhere. We didn't buy anything. It's sherehe now. So what are we saving and investing, ladies and gentlemen? Oh, did you notice we have not saved yet? We have not invested. So what are we saving? And this is the issue we have. We tend to live life quickly, but forget that there's a future coming into play. And so I want to give you 3 tips so that you begin your journey of wealth creation in 2024 well. If you are ready, type it in the chat box. I am ready. First thing, write this down. Pay yourself when? First. And paying yourself first is not what us Kenyans say on a regular basis. What do we say? Kuambia mwili pole. Yes? What we usually do on a Friday, no, that is not paying yourself first. Can I give you advice as to what it is? Paying yourself first is to save and invest first. And the investing automated. What does that mean? From your bank, you have a standing order to your investment account. You have a standing order to your savings account. That's how it works. Because before the money shows up, let it go. You know the way your tax money goes before you even see it. Same thing with your investment. What does that mean? It means that you have prioritized saving and investing. But for many of us, and even in this room, let me tell you, Mganga Hajigangi, in this room, the financial analysts, if we came and did and we have done that research into this area, we are the worst. So can you show us, those of you who are investing, show us. We are good at telling you, but show us the way to go. Pay yourself first means when you receive your cash, this is how it is. If you're a person of faith like me, you pay your taxes. After that, if you're a person of faith, you give to the church. Then the next person you pay is yourself. Save and invest. Now, I won't say what percentage to invest because at Centonomy, we don't talk about what percentage. We talk about goal-based save. Remember where I started? Goal-based. What is my goal? Because my saving and investment is linked to my goal. And so decide at the beginning of the year, this is what I want to achieve, and then you work backwards and say, this is how much I need to invest. So you pay yourself first, literally. When money comes in, if you're in business, if you're employed, doesn't matter. Whatever money comes in, you usually pay taxes, right? You pay towards your faith. The next person you pay without fail is yourself. Now, what does that mean? It means that generally you will have less money in your suddenly some lifestyle choices now have to be made. And that's why we're having this discussion today. Look at this. Actually, let me just move on because we can actually do this. The question is, how much are you worth per hour? Let's actually do it for now. Here's a quick calculation and you can do it on your phone. Type in your current monthly income, gross. Just type it in. And divide that by 160. That will give you your hourly rate. Okay? If you're in the room, just cover your phone so your neighbor doesn't see the truth. Okay? If you're online, don't worry, you're by yourself in front of that computer, in front of that phone. Just type in your current monthly income, divide by 160, which is the number of hours in general you're supposed to be working. So if I earn 100,000, divide by 160, that's about 625 shillings per hour. That's my rate. Now the question is, if you buy a meal like the one I've put on the screen, how long does it take you to finish that 1 hour's work? Does it take you an hour? Some people are shaking their heads in this room. I can see. So we begin to question ourselves and ask, what are we spending our time on? I'm being very practical to you because many of us spend so much time on these devices, right? Especially on Saturdays. You've been working so hard the whole week. Now Saturdays, we're in front of the screen for what? Entertainment. Good, no problem. I am with you. Please watch. One of my businesses, we do productions for TV. I want you to watch television. However, I don't want you to watch for 8 hours that we usually do. Soccer can easily go from morning to evening, isn't it? Take 2 hours. Here's my advice to you. Take 2 hours and drive to that plot that you have never seen that you own. Let me see if I'm going to fail in this room. And online, you can raise your hand. You bought a plot that you have never seen. Lift your hand. In this room, let's be honest, you bought a plot, but you have never seen it. Okay, maybe I failed in this room, but online, there, look at it, see what it can do for you. Because many times we have assets that are in our hands, but we're not using them to the maximum. What could it do for you? Even if you just list that property, not for a lot of money, 2,000 shillings a month. That's an extra 2,000 in your pocket. That's an extra 24,000 shillings a year. If you put that into a money market fund for 10 years, look at the results you could get. But we don't think that way, right? I'm challenging you right now to begin to put your thinking cap on, because investments don't just work by themselves. You work them. And so I'm going to challenge you in this way. Why do we save and invest? And I'm going to put those clues up on the screen. Those of us who said we want to own a nice house, we want to send our children to a good university. Good, we save and invest for those things, but I want to change your perspective on it. We save and invest in order to do what? To spend on the things that matter to us, including going on holiday. Because many of us don't prioritize rest and relaxation. In fact, I don't know if you're like me, you've gone on holiday, but because you didn't save and invest, I've done this. You see, I'm speaking from personal experience. I've taken my children to the beach here, like the rest of Kenyans during December. And then you're at the beach, and they're coming, Daddy, Daddy, can we try? No. Daddy, Daddy, can we? No. I brought you to the beach just to enjoy the sand. Why did I say no? Because I had no extra cash to say yes to the jet ski, to say yes to that trial, to say yes to that thing. because I didn't plan in advance. And in fact, I was just planning how January is going to be January. So this year, plan and decide. We save and invest. The question is, sorry, we are spending with purpose. Are you doing that? Because many of us don't. In fact, we are being driven by this thing called image. And so your image can be more of a prison than it is a resource. In fact, you give in those WhatsApp groups because you don't want people to think badly about you. I didn't say don't give, but I said give with a plan. Many of us don't plan. In fact, I challenge you this year, just look through how much you give. Because sometimes we give not because we have, but because we don't want to look bad. So this is somebody who's thinking more about image than they're thinking about their growth. They're saying they spend more as they earn more. I think this is the one I can quickly illustrate. So you get your first job, right? So your income increases. So what do you immediately do? You move out of your parents' house, you start paying your own transport, you start doing, so the gap between your income and remains the same, isn't it? So you get a promotion. Then what do? Take a car loan, move to a nicer apartment. So the gap between your income and okay, great. Then you move to a nicer job. Wonderful. You get married. Immediately the gap remains the same. That's how we spend more as we earn more. It's not a priority to save and invest. We spend and save very little. I've illustrated that already. The instinct is to work to consume. You're working for a lifestyle. You have to work in order to eat. Your lifestyle starts off extravagant and reduces over time. We're careless about time, and our spending is driven by other people's opinions. So you bought that, you're trying to build a house up country. For who? You are 28, and people say, I want to be buried there. So who benefits from that house? Us. Isn't it the villagers who say, we have a son, we have a daughter who lives? You see that house maybe once a year. So begin to think, how can that asset begin to feed you? Next, somebody who's thinking about wealth creation thinks about it this way. You invest more as you earn more. Now, I didn't say that you can't spend more. I just said, as a priority, you invest more as you earn more. Multiplying and saving is your priority. The instinct is to increase. You're working to create what? Assets, and those assets are the ones that then fund your lifestyle. The lifestyle starts off modest, but please note the second part of that statement, it grows. So I'm not talking about just being a miser for the rest of your life. No, I'm saying having a plan for your growth strategy. You understand the value of time, and your spending is driven by personal values and choices. Buy that car because you want that car, because guess what? Your neighbor doesn't care. You come with a new car, they will say, nice car, good. Then they move on with their lives. You are left with a loan for 5 years. So that somebody said, nice car the first time. And then the next day, if another neighbor comes with a nicer car than yours, suddenly you can't keep up. So if you want that car, buy it for who? For you, with your plan. So can I give you the second tip? So the first tip was pay yourself first. Second tip is what? Track your spending. Most of us have no idea how much we spend. So let's do a short exercise. Everyone in the room, get your phone out. Go to your M-Pesa messages. Now, M-Pesa is a wonderful tool. It's beautiful. It saves us money. But even a good thing, we can overspend. Many of us don't even know how much we spend on transaction costs alone. I want you to do a small exercise. As I'm talking, just add up your transaction costs for this from January 1st till today. Just add it up on a piece of paper in front of you. Don't add what you sent, what you spent. Add just the transaction cost. If you're like me, suddenly you'll carry cash more often. You'll also carry your credit card or your debit card, because you begin to see M-Pesa is a wonderful tool. Please, don't get me wrong. But even good things we can misuse. Do you know how much you spend? Type in the chat box once you're surprised by that number. Now listen to me, and this is why it's so important in a session like this to talk about it. Einstein said that compound interest is one of the greatest mathematical discoveries of all time. Let me explain why he said that. If you take the price of a cup of coffee now, I know this with inflation, it is no longer 150. Now, see, we are paying easily for a cup of coffee, 200, 250, 300. In fact, if you go for the fancy ones, you can even pay 5. Okay, good. Now imagine if you put it into an investment that's giving you a return of 10% per year for the next 10 years. That's nearly 1 million shillings. What I'm trying to do is give you perspective on the power of small numbers. So when you hear of an investment that I can start putting as little as 500 shillings, you think that's little. But when you add it up over a year, now can I show you what I mean? Those of you who are still adding your M-Pesa charges, you'll begin to see very quickly that they add up to almost 500 shillings. And most of the time, it's from this. You're seated next to your colleague. You owe him 1,000 bob. Instead of giving him 1,000 bob from your pocket, you M-Pesa him, isn't it? And you're wonderfully charged 27 shillings. Instead of paying that 27 shillings, invest it. Because in that month, it will change your life over a 10-year period of time. To the young people who are listening to me, you're saying 10 years is too long. No problem. That cup of coffee is the holiday that you wanted to go on. I want you to have a different perspective. And last but not least, I want you to understand the difference between an asset and what at our company Centonomy we call a flosset. That was coined by our founder, Washeke Ndwati. She said a flosset is this. A flosset is something you own that takes money out of your pocket. So it's yours. In fact, even the bank might call it an asset, like your car, isn't it? See, it calls for your car asset financing, right? For your home, asset financing. So I want you to think a little bit differently. I want you to understand that an asset is something that puts money where? In your pocket. Let me explain. So if this residential house that you're seeing here on the screen, about the one on the right-hand side, about how much do you imagine that it would be? Just type in the chat box so that you understand. About how much? Put your best estimate. Let me have a look at what you're thinking about. Your best estimate for the value. Okay, great. So some of you are saying 20 million. Good. 20 million. Wonderful. So if I take a loan or I buy this house, whether I took a loan or I buy it outright, 20 million and I live in it, what is the financial benefit to me? And there is. So please don't say in the chat box there's no financial. There is a financial benefit. What is the financial benefit? I'm not paying rent. Wonderful. Excellent. I could also use it as collateral, but that's a different story. Especially for matrimonial homes, that's discouraged. But I'm not paying rent. So no cash is coming out of my pocket. Wonderful. However, is it free to live in your own home? No. Why? Because you pay tax on that home, especially in certain areas. Good. So you pay tax on it. When the faucet breaks, who fixes it? Who maintains the place? Who repaints that house? It's you. So even if you're living in your home, it is not free. Now, so it means even if you're not paying as much as you'd be paying in rent, money still comes out of your own pocket in order for you to survive. Let me take you to the next level. If I took that same 20 million and I invested it on the left-hand side, I put it into an apartment block. Each one of them is 2 million worth, so there are 10 apartments. If they're 2 million worth, they're going to pay me on average maybe around 12 to 15,000 shillings per month, okay, per apartment. That means, listen to this, ladies and gentlemen, on a monthly basis, I'll have about between 120 and 150,000 shillings cash coming into my pocket by the grace of God. If I had that asset on the left-hand side, it would pay me enough, essentially, to live in the house that's on the left-hand side. Do you see what we're talking about? So you have a house, you're living in it. Sorry, let me put it the other way. So I have a house, 20 million, but I live in it. You have a block of apartments, 20 million, and they pay you rent. Between the two of us, who is more wealthy? Aha. We must have more assets than we have flosets. Of the things that you own, ladies and gentlemen, how many of them actually put money in your pocket? And so when you approach an asset financial manager, what are you looking for? You're looking for items that do what? Put money in. But many of us, it makes take money out of your pocket. That's my final tip for today. Ladies and gentlemen, you cannot control the war in Israel. You can't control housing finance in China. You cannot control the private sector growth, benign inflation. You cannot control what is happening with the US dollar, but you can control what you are doing yourself. And then you come to an asset finance manager and ask them, I want to achieve this goal. How can you help me? So in this year, I want you to begin to focus on assets. Assets do what? Put money where? In your pocket. They protect your investment. Where you put it, at least it maintains its value. They earn some income. They actually put some cash in your pocket. And assets also gain in value over time. That's what you hear the analysts say, capital gains. And I want you to prioritize that for this year. So in summary, what am I trying to say? Personal financial planning is this. You have to have a vision. Have that dream. And it's important because a dream drives you. A dream gives you direction. It orients you in a certain direction. It says, this is where I am going. Hey, in high school, my English teacher used to say this. If you aim at nothing, you will hit it every single time. So put an aim. Hey, even if I don't come as close to that goal as at least I am in that direction. And sometimes you might surprise yourself and surpass that goal. So have a vision. Now I want you to turn that vision into a goal. What is the difference between a vision and a goal? A vision is a dream. Everyone has them. A goal, here, ladies and gentlemen, is you put a timeline and a cost. I want to send my child to the University of Nairobi in the next 10 years, and it will cost me 5 million shillings then. That is a goal. Because it has a timeline. When? 10 years. It has a cost. How much? 5 million shillings. Then I come to look for an investment that is going to get me to that goal. But without that goal, I am simply investing and hoping one day she'll go to one university somewhere. We don't know which one. Now you have a goal. The goal now begins to give you action points. Action points in line with what? The goal and the vision. Now, when you approach any investment company, come to them and say, I want this. How will your investment help me achieve this? Because at that point, now they can do the maths in front of them and to be able to say, hey, this is the direction that I want us to go. Have you set, first of all, have you spent time dreaming? Dream. But dreaming is not enough. Next, set goals. Set goals that will challenge you. Guess what? I am challenging you because I know that you are able to achieve those goals that you have already dreamt about. But it will take courage. It will take time. But in good time, with practice and consistency, you can achieve your goals. We have seen that, as I said, over the last 15 years at Centonomy, we've seen people being able to get out of debt. Why? Because of consistency. Being able to achieve their investment goals. Why? Because of consistency. And consistency is boring. It's like, I always say, wealth creation is like weight loss. It's very simple. Right? Lose weight is simple, right? Who said no? Hands. Let's check. In the chat box, type what you think. How do we lose weight? You exercise, what else? And you eat right, isn't it? Any of those two that require a PhD? So we came here for breakfast. Those of us who are in the room, oh, thank you so much for the wonderful breakfast. But because I am too fat, I am on a weight loss program. I had to pass by the breakfast, and I chose today to have just my cup of coffee. Do you think that was easy? No. But because I have a goal in front of me, it made the choice make sense. Same thing with your personal finance. It's simple. Hey, investment it is simple. You look for assets that will grow over time in line with your goals and simply put on a regular basis. Please, here's one of the mistakes that we see many investors make. They think I'm going to come, I will put 100,000 shillings into your equity fund, and in the next 20 years, I will become a multimillionaire. You do that, and then your neighbor does this. Instead of putting 100,000, they put 500 every month. Every month. Every month. Come back in 20 years and see the difference in results between those two. The one who had consistency and the one who was hoping that this, our gambling mentality in this nation goes too far. Because that's what people think investment is. I'll put 50 bob today and I'll become it doesn't work that way. It is the consistency over time that will get you to your goals. So ladies and gentlemen, wealth is the ability to live the lifestyle that who wants? You want, without having to work. What does that mean? That we have sufficient assets, that our assets put enough money in our pockets for us to live the lifestyle that we want. At Centonomy, we are an education company that is building your ability to grow wealth. We help you to grow and to build what you want in this environment. So check us out on any of the social media and online. If you Google Centonomy, you'll find us. But I want you to begin to make a step today towards your goals. And that's one way of doing it, is to automate your investment strategy. Put money aside regularly and you'll see the growth over time. Ladies and gentlemen, I hope that has been helpful to you. We'll be taking questions in a couple of minutes. So to all of you, good morning, and begin your wealth creation journey today. Thank you so much.
Wow, that was stimulating, wasn't it? Yes, I hope it was. I have been in this space for a while and I still was able to pick up a few things that I can implement, and not implement end of the month, implement immediately. Many of us are always saying we'll start the diet next Monday. This Monday never comes, right? So let's say whatever we've learned, we are going to implement, move it a notch or move it just a step today, not tomorrow, today. So I like the definition of wealth. And in my own words, it's yes, similar to what he said, having sufficient assets to enable you to sustain your lifestyle without working. And I'm sure if we all looked at that phrase, the part we all loved is without working. It sounds so good. And we are in the era of soft life, right? But the thing is, for us to enjoy that soft life someday, you have to work hard today. They always say choose your hard. So choose your hard by working hard today so that we can enjoy living without working. And if we are working, is by choice in future, or have it easy today and have it hard in future. So just as Waithaka has said, we need to dream, but after dreaming, we need to take action. Yeah, you make the plan, and after you plan, you need to take action. And that action can be by getting an accountability partner. Yeah, if you need that support, and that is through engaging with a financial advisor or an investment manager. So we have a few questions, and I think Waithaka's questions maybe will have come after his presentation, but for now, we'll pick 5 questions that I think are cutting across, and I'll have Esther and Raphael. Raphael is the CEO of the Ilam Fahari REIT. That is our real estate investment trust. He'll answer the questions pertaining to property. So the first question, as they make it on stage, the first question we'll answer is, what is the likelihood of the government of Kenya defaulting on its sovereign debt? And the other question she'll answer is, cash is king, in Kenya shillings or in US dollars. But how will the current MPC, which is the Monetary Policy Committee report, affect us? Esther, just come on stage. And then, so is the money market fund still a safe investment in this economy? I think, Esther, another question for you is, what are other liquid assets that we can invest in other than the money market fund?
Thank you so much, Kanza. So the first question is, there's someone who is quite pessimistic, and he's asking, when will the government default? When will it happen? As in, they're already expecting it will happen. So anyway, let me answer the first question. So is the government likely to default? From where we sit, I would say no. Anything is possible, yes, but from where we sit, no. And why is that the case? First of all, it's unconstitutional. We are not, according to our constitution, we cannot default. And that is why, like now, a lot of there has been a lot of talk in social media on the Eurobond, and really on how the government will default. The forex reserves, we have enough forex reserves to pay the $2 billion, worst case scenario. So I don't believe that will happen. And so for the person who was asking when we expect that to happen, I don't foresee that, at least for this year. And when I say cash is king, what I mean is you need to have, whatever you're investing in needs to be an investment that you can easily liquidate to take advantage of any investment opportunity that comes your way. Do you then invest in dollars? Do you invest in USD? And I can see where that question is going. We you know, from an investment perspective, one of the problems we are having, or rather the key issue we are having, is currency volatility. So to stand here and say that we need to encourage more dollar deposits, in as much as that is what is making sense, I think it's a double-edged sword. And why is that the case? Is you continue mopping up dollars from the market, what you're basically doing is that you're starving this economy of the necessary growth it's meant to have. You're increasing currency volatility, because every time, even with the IMF pumping more money, that money is going into dollar deposits. Somebody gets that money, gets it out of the circulation. So we need those dollar deposits to unwind. So yes, from an investment perspective, from a selfish perspective, you'll say you'll park that money in USD, given the outlook on currency. But that is one of the issues that we are currently having. We continue to park money in dollars, then of course, we will continue to definitely strengthen, or rather depreciate our currency. So park money in Kenya shillings, because you're transacting in Kenya shillings within Kenya, unless we want to dollarize our country, our transactions. How will the current MPC report affect us? So for that question, the last MPC report that was released, or rather the last meeting they had, was in December. And that is when they actually increased the central bank rate to 12%, 12.5%. So how will it affect us? Definitely. The moment that is a signal, we use central bank rate as a signal of interest rate direction in the country. So definitely what that meant is that the next bond auction or treasury bill auction will definitely be higher in terms of interest rate level from where we are. So we are expecting further upward pressure on rates, or rather we expect interest rates to continue rising because of that report or that action by the MPC. Then is MMF still a safe investment vehicle? Yes. I will say that with certainty because of the governance structure of MMFs, that is the money market funds. When you look at it, you have a fund manager, you have a custodian, and of course you have your trustee. And over and above that, there is the CMA. Unit trusts are guided, or rather governed, by the CIS regulations. And as such, there's a very tight, or rather it's ring-fenced against any sort of malpractices. In terms of the assets they invest in, that guidance also really directs. And of course, we've had issues maybe where money market funds are not investing in what they should. But by and large, from the governance structure, money market funds are one of the safest places you can invest your money. And what other liquid assets can we invest in other than the money market funds? So I'll talk from a ICA Lion asset management perspective. We have retail products, and in addition to the unit trust funds, we also have the private wealth management solution, which is a customized solution. It's we have it at a minimum of about 5 million. And what we then do in that solution is we give you leeway, or rather we invest for you in what we call the call deposits or bank deposits, which would also be very liquid. Call deposits, you can always, what it means is that you can always access that money as and when you need the funds. So that is another option that you may have. So deposits basically in this environment are the ones that are really driving returns. And then which companies are those with low debt and we can invest in. So we normally do our research. We have a research department. And okay, when you're asking this from an investment perspective in terms of perhaps tapping into the stock market, we have companies that have business models that are very cash generative, the likes of Safaricom. When you look at M-Pesa and the kind of cash flows that of course, flow into that company. But it takes a lot of analysis and research. You can always come and talk to us. We will definitely give you this information. But an example is Safaricom. Of course, even the banking sector, there are some banks like the likes of Equity Bank, and I'm not standing here to really vouch for some companies. But what I'm just saying here is that there are companies that are cash generative. So they are really, when you look at their cash at hand, they have a lot of cash. So those are some of the companies, of course, you can invest in when it comes to the stock market, but we can have a further discussion on that. We have our equity fund, and that is where we have packed some of those companies. And I'm sure in time, if you're looking to invest in the stock market, it's a good avenue to really tap into, because we offer that professional fund management or advice to you through those funds. Thank you so much.
All right, thank you, Esther. And this being Kenya, we cannot miss a question on property. So I'm inviting Raphael on stage to take on the questions on property. As he walks on stage, I'll just run through the questions. And the first is, what's your view on investing in real estate, building residential homes at this time, taking into account the setup of affordable housing by the government? And the second question, what about real estate rentals like? May not be clear, but I think the person who asked the question wanted to know about rentals in rural areas. So welcome, Raphael.
Thank you, Kanza. This is typically Kenya, and as Kanza has indicated, we can't lack a question on real estate. That will always happen, because as Waidak was presenting, you remember he talked about this piece of land that we have all over. And that's a case. Some of us might be having some land. Who knows a place called the Ibisil? I know people who own land in Ibisil, which is about 70, actually over 100 kilometers from here, and yet they go there, 20 kilometers in, you have a nave. And the question is, when will we ever get to that eighth to build? Because we need to develop it. And that's where we started. There is a time in Kenya, we had this craze for land, and we bought land everywhere. Even in Magandi, I have friends who have land, and they are aides, and in different places in Magandi. But I think we also working with a younger generation, which is like, you know what? Mimi, I'm not touching land. So we started seeing that. So we started getting into a space where we seeing rationalization coming in this space, especially in real estate investments, and people are actually starting to ask those questions. What am I investing for? Why am I buying this piece of land? Am I buying it to hold or to actually develop? How will it give me cash? Will it appreciate in value? And we've actually started seeing those questions coming up, because there are people who bought land in Kajiado, because Kajiado is where we sold mostly. So we sold a lot of land, eights in Kajiado, then went to Nanyuki, went to Malidi, and then when you really need cash, you've come and you want to turn that asset into cash. You realize you're actually getting a fraction of what to put in. And that has forced a lot of us to now start asking these questions that we're seeing, which are actually good questions. And one of the questions that I've seen here are related to residential development. Now, in Kenya, definitely, and we're mirroring a lot of what's happening in Africa, we're struggling with housing our people, whether you're talking about Nairobi or any of the other counties. And we have a population that is growing at about 3% on an annual basis. We have a typically younger generation, but yet we are, in terms of really residential housing, we have a deficit. We're not putting out enough houses to actually house our people. So what we've seen, especially even from our market research, is that apparently rentals or rents in Kenya, whether you're talking about Kisii or you're talking about Nyeri, talking about Nairobi, locations like probably Kasarani, Rogai, wherever, the rentals have collapsed to what I would call a very narrow range. So you'll find what you're probably paying for a 2-bedroom house in Kisii and what you'll be paying for in Rongai. There really, it's within a very narrow range, especially for good quality housing. So we're struggling with housing, that's for sure. And you can see that's why the government is trying to step in with the affordable housing scheme. Whether it works or not, we're not here that today to judge that. It definitely has its own challenges, and it's had a lot of challenges in the past. But the question then that has been asked is, what's our view? Do we continue investing in real estate? These two questions were typically really on for rent real estate. And typically my view from here, because I've been involved in this space the last 20 years, real estate has remained a resilient space to invest in, especially if you're investing with a target. This for income, you going to what I would call in Nairobi, because again, what happened is because of our affinity for land, some of these locations that where I would want to live, your Kilimani and all that, land pricing went so high that for you to justify a return, an investment that gives you a double-digit return, you struggle. You'll either have to densify, so that's what you see Chinese doing 20, 30 floors and 100, 200 units on perhaps an acre of land. And then the questions on densities are coming. But we're seeing these secondary nodes in Nairobi, for example, that are rising. You are typical Kasarani, you're talking about your Rogai, you're talking about Gong, perhaps, where we're seeing, yes, you have an eighth or a quarter, and you put a typical number of units, and you actually get a double-digit return. So that space, I can see for sure, and this is really informed from a global perspective, housing will still be needed. Even in advanced market, even in the US, people are still investing in residential housing, and they're still making money. But the question is, how do you approach it? So there, of course, you still need to talk to your investment advisor, especially somebody who is who has skill set in real estate, because real estate you can also easily burn your fingers. So yes, there is that space, there is that opportunity, but not just in residential, across the board. Even in what I would call commercial real estate, there are still a lot of opportunities in this nation, in this country, in all the counties. But then you need then to talk to someone in that space who has done this before, who has had experience and actually success in this before, to actually guide you in that process. It's the opportunities for sure across the country, across Kenya, all the counties, and even in Nairobi. But then don't do it the Kienyeji style, the way we would buy land and hope that it will ever appreciate. And when you need to convert it into cash, you actually take a hit. It is very possible with real estate, and we've seen it, to take a big hit. Thank you.
Thank you, Raphael. I think you've answered those questions comprehensively. So I request that we show the results of the poll. And allow me to turn to look at the screen behind me. Or where can I see the results of the poll? All right. Okay. Can I have somebody just read it through? Somebody just come here with their laptop and read through the results of the poll. They are taking long to mirror on the screen. Oh, all right, great. So they have come on the screen. And the first question was, do you have a financial plan? Waithaka talked about this. And that's a good response, because we're about 500 on the webinar. So about 65% say yes, so good for you. Those who said no, I hope you've been able to get a good idea of where to start and how you can progress. And those ones who are saying YOLO, I hope you catch up with us. As we've said, do the hard work today so that you can have it easy tomorrow. What is your current financial situation? And there were 4 options. I have adequate disposable income to meet my needs month on month. I live beyond my means. Niko tu, and in January, right? Still, I think the answers are split into 2. There are those that have a disposable income month on month, and there are those who are Niko tu. Niko tu means you're not very confident on where you are. And I think it being January, having gone through December, we are suffering through the January effects. That is expected. But my challenge to you and each one of us is, can we change that narrative? Can next January get you prepared? Because we know January is coming. December is coming. Is it a surprise? For those who have kids, school fees is coming. We've paid in January. Regular expenses that come throughout the year. And those are the ones that get us off guard. So what you can do is get those expenses together, divide by 12, and start saving that amount so that when that time comes to pay off that expense, you're ready. And if you do so, I am so sure next January you will be prepared and you will not suffer, eating ugali and skuma until payday, right? Okay, so the next one, where do you receive financial advice from? And there are several options. I'll just look at the one that was most popular. Again, I think, please, let's have the screen moving down. And a good number of us said financial advisors. And why are we insisting on getting the right financial advice? It's so that you can make the right financial decisions. Gone are the days you make decisions based on peer pressure or your friend. Because at the end of the day, who is living that life? It's your life. So financial planning and investment planning is very personal. Be involved to some extent. You may not understand the investment jargon, but with the right accountability partner, with the right advisor, you can make the best decisions for yourself. Right? So what stands in your way in living within your means? I'll just again pick the most popular answer. Daily expenditure. Yeah, and I think we've been told how we can improve that. First, make a budget. I have been training people on personal finance for so long, and many people tell me, oh, nowadays we really don't need to write it down on paper. Well, there are apps. Because what you write is so important. Until you see it with your eyes, not visualize, because we like dreaming. Yeah, until you see it with your eyes, it's very hard for you to make a plan. So do a budget according to the means that you do best, whether online, whether on paper. You'll be surprised on where your money goes. Yeah, and remember that even in what we earn monthly, we spend our money in this way. There is expenses, there is saving, and paying your debt. So you need to balance between the 3. And we cannot spend all our money on expenses. We must also cater for our future self. Because tomorrow is coming, emergencies are coming, and you need to be prepared for that. So I hope based on this polls, we liked your honesty. I hope we are all honest. It wasn't for show. And that you've been able to make a few resolutions that you can be able to work on and implement. As we said, we are implementing today. Right? So we'll jump into a small video as we are wrapping up. We'll wrap up in the next 10 minutes. So allow us to show a video, and then we wrap up with a short message. Thank you.
Barbecue in his home with his family and business. Meet Mark. Mark is enjoying a barbecue in his home with his family and business partners, celebrating his successful business and family milestones. You might be wondering, how did he end up here? Through a partnership with ICEA Lion, Mark started his financial journey as a young adult. He was a bachelor at the time. He had been told that the best thing he could do for himself was to start saving immediately he started working, even when the income seemed low. Mark has been a disciplined saver and has been able to see his investments grow with time due to the magic of compound interest in the ICEA Lion Money Market Fund. He has been a positive influence on his wife, his business partners and friends, and his children, impressing on them to save and invest with what they have and not postponing investing until someday. We all know that someday never comes. Mark opened several accounts with the ICEA Lion Money Market Fund. He opened a joint account with his wife, a corporate account with his business partners, and junior accounts for his children. During tough economic times, we may want to pause or quit. Yet even in such times, we should continue to save for our future and emergencies. There are always opportunities to grow your savings. Reignite your financial journey today. Be like Mark. Your future self will thank you. Visit ICEA Lion and open your own account, a junior account for your children or grandchildren, and a joint or chama account. Meet Mark. Mark is enjoying a barbecue in his home with his family and business partners, celebrating his successful business. Mark started his financial journey as a young adult.
Thank you for staying with us until this point. And the pomp and the flair is a celebration of you, our clients. We thank you for choosing us as your investment partner. We don't take it for granted. There are many providers out there, but you've chosen ILAM to work with you. And we are committed to continuing to work with you in your investment journey. So today we celebrate your feedback. We celebrate your feedback and your suggestions because that has enabled us to be able to enhance our online experience. As the video has shown, we are now able to allow you to onboard digitally and be able to track your investments digitally. And we still interact with you because we still have financial advisors who can work with you. We still have the contact center and a customer service team that are there to talk and respond to you should you write to us. So today we launch our improved online experience, hashtag DigiTrust. I'm sure you've seen it. So hashtag DigiTrust is our online experience from onboarding and also from a portal that you can be able to access your account and track your investments. So as my colleagues get off stage, I'll just wrap up. And just as you've seen in the video, you can now be able to save for your children and your grandchildren. Easy onboarding online. You can be able to save as a Chama and track your investments because we have a Chama account. And the Chama account is available for registered Chamas and unregistered Chamas, and also for corporates. Yeah, if you'd like to be able to invest your income so that you can earn that additional interest, we are there for you. And as a joint account as well, so as couples, as friends, where you have joint or a common goal and you'd like to save and invest, we have those accounts available for you. So as we wrap up, I would like to say, if you'd like to talk to us, please see our contacts. They're on the screen. They'll be displayed there shortly. If you're an existing client, it's the new year, please feel free to engage your financial advisor and make a plan for the year. And I would like to thank you. There are about 500 of you who logged in, who have participated in this session. We hope you learned and enjoyed the session. And we can only wish you the very best of this year. And we look forward to continuing to work with you. So thank you so much and goodbye till next time.
I want to do more with my salo so I don't squander it. Then answer with DigiTrust from ICEA Lion and be skuming some money there every month. The interest your cash will be earning from the ICEA Lion Money Market Fund, my guy.
It will make you my guy.
My guy. Answer sasa. Visit invest.icealion.com. Wazi Joe.
That's what's up.